be Wednesday, the 3rd of January 2024. So before we start our daily dose of market insights, let's take a look at the disclaimer slides first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. All right, and as well as any forecast, prediction, or projection in this document is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. All right, so yep, before we start our short-term technical outlook, let's have a recap of what happened yesterday first. All right. Okay, so basically, yesterday was the kind of a first start of the new year in terms of the broad-based asset class trading. That is the start of the brand new year. So we do expect a bit of this synchronization across the market due to lower liquidity. So yesterday we start to see a sell-off in the US benchmark stock indices, but not centered across the board, but more likely on the mega cap stock. So if you look at what's the mega cap stock, that means we talk about the technology mega cap stocks with the likes of Apple, Amazon, as well as NVIDIA. So if you look at the heat map over here, let me share the heat map of the S&P 500. Okay, so what you could see across the board over here, there was a rampant sell-off in the mega cap stocks. Okay, one of this rampant sell in the mega cap stock is actually lead to what I call a cascading impact, especially centering on Apple first. Why? Because yesterday there was actually a downgrade by one of the sell-side brokerage, which is Barclays, downgraded Apple to underweight. Okay, let me expand my screen so you could see more clearer. So they actually Barclays downgrade Apple to underweight for the first time since 2019, citing due to lack of new features, and there's a what I call a demand risk, lack of demand risk to hit iPhone upgrades. As you know that iPhone actually, in terms of the total revenue of Apple, iPhone constitute close to 50% of the total revenue mix of Apple. So yesterday's downgrade by this sell-side brokerage Barclays kind of cascade this negative feedback loop into the 7 mega cap stocks. And also on top of that, US Biden administration actually pushed for this one of the major player in the semiconductor industry, which is ASML, to actually cancel shipments on their limited number of devices to China ahead of that regulatory. Yeah, so basically, so they asked them to stop payment immediately ahead of schedule. All right, so in terms of this, okay, put in a nutshell, this ongoing high-tech war between China and US is not backing down yet. So yesterday's push by Biden administration to actually instruct ASML, which is a key player in the semiconductor industry, to actually stop with immediate effect of shipping lower tier semiconductor related chips or particle to China, to take into account of effect yesterday instead of scheduled, earlier than scheduled. So that actually causes this negative feedback loop into the semiconductor industry as well, where NVIDIA plays a significant portion on the Nasdaq 100 performance. So what we could see yesterday over here is that the Nasdaq 100 actually underperformed the benchmark indices due to its heavy weighted concentrated on the mega 7 stocks, the magnificent 7 mega cap. But however, a bit of what I call a consolidation is that the Dow Jones Industrial Average managed to close unchanged at positive 0.07%, whilst the Russell actually fared better than the Nasdaq 100 with only a loss of negative 0.7%. So net overall, what you can see over here is to me is more like a knee-jerk reaction at the start of the year, especially with negative news flow out from the semiconductor industry and as well as Apple, that causes the sell-off in the Nasdaq 100 yesterday. But what's important over here is that later I'll share with you the short-term technical outlook right away, that the Nasdaq 100 in fact actually rebounded off that short-term pivotal support level that we actually highlighted yesterday. Okay, and also the dollar actually regained strength as expected. Those who actually listened to our daily dose of market insight yesterday, we did advocate for a potential corrective rebound in the dollar within this short to medium term downtrend where we still do expect the dollar weakness to actually come back into play late in the later part of this week. So the dollar actually rebounded yesterday within our expectation, and the dollar index actually now coming very close to a resistance level. Okay, now let us start with the technical outlook on the major benchmark indices first. All right. Okay, so let me now expand my screen so that you guys could see. Okay, so let's start with the Nasdaq 100. So on the Nasdaq 100 yesterday, yes, it did a sell-off, but this sell-off, where does it stop? It actually stopped right at the 16,590 / 16,475, bit of excess. So that's our short-term pivotal support level we highlighted yesterday. Why this level is important? It also confluence with this upward sloping 20-day moving average, where price action hit and rebounded right at the close of the US session, and as well as also the lower boundary of this minor ascending channel that is in place since the low of 4th of December. So no change. We are still expecting, still maintaining that short-term bullish bias on the Nasdaq 100, using the lower excess at 16,475 as a short-term pivotal support level for today. First resistance level to watch will be at 16,800. So this level actually kickstarted that minor steep decline during yesterday's US session. So this is the first resistance in order for the bulls to surpass 16,800 level. So that's the first level to watch for today. A break up above 16,800 level potentially could actually see a retest on the current all-time high level zone, all-time high level swing high area at 16,990. Okay, so this is the two resistance level to watch for today. Still maintaining that short-term bullish bias, holding above 16,475. First resistance 16,800, followed by 16,990. However, a breakdown with an hourly close below 16,475 will invalidate this short-term bullish bias to see an extension of this corrective decline within this medium-term uptrend phase of the Nasdaq 100 to expose the next support level at 16,160 / 16,125. All right. The Dow Jones Industrial Average, which is actually the top performer yesterday among the major US stock indices. So you see yesterday's push down stopped right at the short-term pivotal support we had yesterday, 37,470. We saw confluence with this lower boundary of this minor ascending channel that is in place since 10th of November 2023 low. Then also overall, the RSI also managed to maintain above the 50 level, indicating to us that the short-term bullish momentum still remains intact on the US Wall Street 30. And also yesterday's price action also looking to actually attempt to actually push up to retest the minor swing high area of 37,800 level, which is close to the current all-time high level. So net overall, still maintain that short-term bullish bias on the Wall Street 30 using 37,470. For sure, that will be the short-term pivotal support level. A breakout above 37,800 today potentially exposes the next resistance at 38,100. Only a breakdown below 37,470 negates this bullish tone to kickstart a minor corrective pullback to retest this upward sloping 20-day moving average, now confluencing with the next resistance level at 36,170. The DAX. So the German DAX over here is yesterday it did a wild push up before hitting our short-term support level, which we have a bearish bias to play within that range kind of a configuration. So for what's interesting over here is that the price still managed to survive the 20-day moving average. So bear in mind, this is trading view. I could actually overlay a higher time frame technical element over at a shorter time frame chart, which is the hour chart on the German 30. So this is not a 20-hour moving average, it's a 20-day moving average. So what's interesting over here is that there's a test of this 20-day moving average before price action managed to survive this 20-day move, survive above the 20-day moving average during the close of the European session. So indicating to us that the short-term uptrend phase of the German 30 index remains intact. So for today, we'll be flipping to a bullish bias on the German 30, which is the DAX, holding above 16,550, which is the minor range resist support level that is in place since 8th of December, confluencing with the ascending channel support as well, that is in place since the low of 7th of November. So overall, flipping to a bullish bias using 16,650 as a short-term pivotal support for today on the German 30. First resistance to watch will be the range top, the minor range top that is in place since 14th of December at 16,970. A breakout above 16,970 exposes the medium term, the next resistance at 17,100. However, hourly close below 16,650 invalidate this bullish tone to kickstart a minor corrective pullback towards the next support level at 16,460. Lastly, Hong Kong 33. So on the Hong Kong 33, still no change, using 16,550 as my short-term pivotal support level, where price action managed to hold above this level during the US session. Why this level is important? Because it's confluence with two different technical elements. One is the 20-day moving average, followed by this minor ascending trendline support level that is in place since 11th of December 2023 low. So both of them are confluencing at the same level at 16,550. So no change, 16,550, maintain that short-term bullish bias for this ongoing minor corrective rebound scenario to test 17,950 in the first step. A breakout above this level may expose last Thursday and Friday swing high area and the 50-day moving average, all acting as a resistance at 17,160. Only a breakdown below 16,550 will see a messy, another round of messy, choppy, we call it move, to test the range support level that is in place since 14th of December, 22 of December at 16,330. And what's interesting over here is that the RSI now managed to bounce off from the oversold level, indicating to us potentially there could be a kind of a mean reversion rebound scenario to take shape back to test that 17,950 as long as 16,550 key short-term pivotal support holds for today. Okay, that's pretty much sum up for the benchmark indices, FX market now. So if you could recall, euro dollar yesterday, we do have a bearish bias. So the euro dollar almost hit the support level that we highlighted yesterday. So we will now flipping back to a bullish bias. Why? Because price action now managed to hold right above the 20-day moving average. And also there's a bullish divergence that's being seen on the hourly RSI, indicating to us that there could be signs of a resurgence of bullish momentum coming back into the euro dollar. So with that, I'll be using a slightly below 109.30. So 1.0890 will be my short-term pivotal support for today. As long as this level holds, potentially the euro dollar could actually see a first test at the intermediate resistance at 110 figure level. A breakout above 110 figure level could take us up next towards 110.60 next in the first step for today's bullish bias outlook on the euro dollar. However, a breakdown below 1.0890 invalidates this short-term preferred bullish outlook on the euro dollar to see an extension of this minor corrective decline within its short and medium-term uptrend phase to test the 20-day and the 50-day moving average. Now acting close to this, confluencing with this graphical resistance zone at 1.0820, which is the former minor swing high of 8th of December and 12th of December, now acting as a pullback support level. Okay, so all in all, given the two technical and positive elements have started to resurface on euro dollar, a bounce off from the upward sloping 20-day moving average and the bullish divergence that's being seen on the hourly RSI, indicating to us kind of a resurgence of a short-term bullish divergence back to euro dollar. So for today, we'll be flipping back to a bullish bias, holding above 1.0890 short-term pivotal support on the euro dollar. Very similar on the sterling dollar as well. Price action indeed hit our support level yesterday at 126.50/126.30. Also, there's this bullish divergence that's been seen on the hourly RSI. Okay, indicate to us there's signs of a resurgence of bullish momentum back into the sterling dollar. So I will be using slightly below 126.30, 126 figure level, which also confluence with this former minor swing high of 8th of December and 13th of December, now acting as a pullback support level. As long as 126 figure level holds, we'll be flipping to a short-term bullish bias on the sterling dollar, looking for a potential first sight at 126.10. Above it potentially sees yesterday's swing high at 127.60. Only an hourly close below 126 figure will invalidate the short-term bullish outlook on the sterling dollar to kickstart and this minor extension of this corrective decline scenario to test the 20-day moving average and the 50-day moving average, potentially confluencing at this graphical support zone at 125 figure level, which is the swing low of 8th of December and 14th of December. Aussie dollar. Okay, so Aussie dollar yesterday we also have a bearish bias, but it really hit our support level at 0.6740, 0.6730. This level was important because it's actually the former major descending trend line that was broken up on 21st of December. Yesterday, it actually managed to stall at this pullback support level. And whilst it's stalling at this pullback level, it shaped a lower low, but the RSI now managed to shape a higher high. Okay, lower low, higher low. Okay, so what it means that over here is that the downside momentum has started to ease off, indicating to us a potential fresh start of another new impulsive uplift on the Australia dollar, which is still trading within a short and medium term uptrend as price action going to hover above a upward sloping 20-day and the 50-day moving average, where the 20-day is above the 50-day moving average. So all in all, flipping to a bullish bias in anticipation of this start of a fresh new impulsive uplift on the Aussie dollar, as long as 0.6730 short-term pivotal support holds. First resistance to watch will be yesterday's minor swing high at 68.35. However, a breakdown below 67.30 will invalidate this short-term bullish outlook on the Australia dollar to see an extension of this minor corrective decline to test the next support level at 66.65 over here. Dollar yen. Okay, so dollar yen yesterday we do have a bullish bias towards 42.85. So price action indeed rebound as expected. So it's coming very close to this 42.85 level. So potentially, right, price action hasn't hit the overbought level yet. So potentially we could see another residual push up coming close to this 42.85 level. So since there's no test on this price action yet, I will not use 42.85 as my key short-term pivotal resistance. So I'll be using slightly above it, which is the 20-day moving average, and as well as this congestion area over here, 143.40 will be my short-term pivotal resistance level in any potential rebound. So as long as the rebound didn't surpass 143.40, we will be having a bearish bias for a resurgence of another impulsive down leg that is potentially coming very soon back into play of the dollar yen, taking into account of that dollar weakness that's been starts to actually show on the rest of the major currency pair that I shared with you all earlier on. So 143.40 will be a level to fit any potential strength on the dollar yen. So we're flipping to a bearish bias on the dollar yen with the potential sign of a one more residual potential push up. So as long as 143.40 level didn't surpass the upside, flipping to a bearish bias on the dollar yen to see a first retest on the swing low area of 28th of December, which is 140.70/25. However, a further push up above 143.40, that means an hourly close above 143.40, will see the extension of this minor corrective rebound scenario towards the next resistance at 145.05 level. Okay, gold. So spot gold, no change. Yesterday price action hit the first near-term support level and staged a rebound. So I will not use this 2058 level as my key pivotal support level, but it's too tight. So no change, still use 2047. As long as 2047 didn't surpass to the downside, maintain this short-term bullish outlook on spot gold, XAU/USD. first resistance to watch 2090. A breakout above this level exposes the next resistance level, which is the all-time high swing high area, lower limit at 2011.7. An hourly close below 2047 negates this bullish tone to see an extension of this minor corrective rebound to test 2027/2015. Do not forget the short and medium term trend still remains intact on the spot gold ex USD as price action going to trade above the 50-day moving average. Lastly will be WTI crude. So WTI crude oil price yesterday tumbled again due to this risk off that was being seen on the Nasdaq 100. So momentum appears to be weak on WTI crude oil price. Price action whipsaw at the 20-day moving average can't maintain that momentum before piercing downwards during the US session yesterday. So I'll be using the close to 20-day moving average, which is 72.30 as my short-term pivotal resistance for today, flipping to a short-term bearish bias for WTI crude oil price to test 68.90. A breakdown below 68.90 potentially sees the test of the medium-term support level at 65.55/67 figure level. This level is pretty crucial in the medium term. Why? Because it's actually the swing low area of May and June this year, where price action managed to actually survive during that previous sell-off. Then thereafter, it managed to hit that medium-term rally, where we rallied more than 22%, in fact 25%, yeah, to be precise. So this level is pretty much crucial, 67.55/67 figure level. So in the short term, we'll be flipping to a bearish bias as long as 62.30 short-term pivotal resistance not surpassed to the upside, with these two support level to watch for today. However, a breakout above 72.30 will invalidate the short-term bearish bias to see another round of minor corrective rebound towards 74.95/76.05, which is the swing high area of 27 December, and the downward sloping 50-day moving average. Okay, so with that, let's take a look at the economic calendar. What are the key events to look or data to look out for today? So today, Wednesday, is a rather quiet day. So what we have today later on will be the release of the ISM Manufacturing PMI data for December at 11 p.m. Singapore time, followed by the FOMC minutes later at 3 a.m. Singapore time. And bear in mind, slightly earlier at 9:30 p.m. before I forgot, there's a Fed speak by Fed Banking. So potentially these are the events that could actually create a bit of uptick in volatility during the US session later. So my apologies earlier on for that slight technical glitch on the sound. So with that, do have a great day ahead, and we shall speak again tomorrow. Thank you.